Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was, another down day for the market. Remember, on Friday, we had shaved off over 200 points on the Nifty, and of course, with the geopolitical tensions escalating over the weekend, of course, we were expecting, a subdued open for the market. But of course, it's a 250-point cut on the index, which has fallen above that, below that rather 22,300 mark as well. The Sensex, of course, dropped over 800 points below that 74,000 level. India VIX saw a sharp spike, 8% kind of an uptick on the India VIX index, which is above that 12.5 levels, and broader markets also came under a fair bit of selling pressure, although they managed to come off session lows at one point in time. At market open, we saw an over 2% cut on the Nifty mid cap index, but it did temper down a bit. But it was still a 1.5% kind of a downtick on both the Nifty mid and small cap indices. If you look at the market breadth, it was extremely poor. The NSE advanced decline ratio was at 1:5. So every one share gaining for every 5 shares declining. So that's the kind of pain we saw across the broader markets. The Nifty Bank index also broke below that 48,000 level. That was a crucial level that was being watched out for on this particular index. Almost all the sectors ended in the red, barring the Nifty oil and gas index, which of course got support from ONGC. But among the individual movers on the Nifty, among losers you had the likes of Wipro, UPL, Bajaj, Finserv, ICICI Bank, L&T and Eicher, and gainers are few and far between. 4 or 5 gainers in the market on the Nifty today. So ONGC, Hindalco, Maruti and Nestle, these were among the stocks that managed to hold out in a weak market. But let's take stock of how things are going to pan out from here. I'm joined by Kush Bohra, who's the founder of kushbohra.com this afternoon. Great to have you on the show, Kush. As always, it's always a pleasure chatting with you. But in a matter of 2 sessions, we've shaved off over 400 points on the index. Here on, how's the texture looking like for you? Do you think there's been some kind of a trend reversal here? Or do you think, the dips will get bought into like they have in the face of challenges?
Hi, Nandita. First up, a very good afternoon and always a pleasure to be here. Well, see, in hindsight, we may well say that, this dip was due and, it's good that the market is corrected and all of that. But even if you look at it from, let's say, a weekly standpoint, the charts were indicating a negative divergence. While, the magnitude is a bit of a surprise, that 400 points nearly in a matter of 2 days is a bit of a surprise for sure. But I don't think the general direction is per se as surprising. If the markets would have consolidated in the same range as it as they were on Friday, perhaps that too would have been in line with the setup that we've been seeing technically. This dip, what it has done is that it's just reduced the pain of, let's say, a week-long period to maybe a couple of days. Now the Nifty is placed at a very delicate, area, which is the 22,000 to 22,200 zone. Happens to be a strong support zone, 22,200, but thereabouts also happens to be the 20-day moving average where the Nifty is, closed. So I think we are now delicately placed. The texture of the market in the recent past has been buy on dip. Till this zone of 22,000 to 22,200 is protected. We would like to believe that that is still intact. So we don't see a big lump from here on. Also, if you see the options data, then the weekly expiry for the 18th of April is suggesting 22,200 has a strong foot base. So all in all, I think this dip, what it has done is that it has reduced like a week-long pain to a couple of days. I know it's a little severe to look at, but that it's brought the Nifty into a territory where you can consider buying closer to support zone.
Alright, so you're saying 22,200 could be a floor that one can really look at. But with respect to Nifty Bank Index, few sessions ago we had topped that 49,000 level. But of course today there was a 800 point slump nearly, and we've broken below that 48,000 level, which was being looked upon as a crucial level for the Nifty Bank Index. We've snapped out of a 6-day winning streak where the Nifty Bank Index is concerned. So here, any level to watch out for on the downside now that 48,000 is broken?
Well, there you're spot on. The 48,000 level was actually a very crucial mark. 48,000 to 48,600, if I can put that in a broad band, was a zone where the Bank Nifty had hit, a high. It had spent some time, late last year, early this year, and before it started to crack down. So that zone actually was, a lot more important. we've closed below that. Interestingly, the 48,000 put also now has one of the highest, call, or rather the call has one of the highest bases, and tomorrow's the weekly expiry. So there is a possibility that the bank nifty can remain under pressure, and that 48,000, 48,200 range could be a challenge to regain. Even if we do, I think we might consolidate around that level. Also, let's not forget one thing, that the bank nifty had a lot of catching up to do, and what we saw in the last month and a half was actually more of a catch up rally than anything else. Now, after that, amazing streak of what, nearly more than 2,000, about 3,000 points of jump up in a month and a half, I think some profit booking was anyway due. Again, here too, the magnitude has been a bit of a concern. Now, the level that we're watching for on the downside is actually 47,400. If that is taken out, perhaps the bearish trend for, let's say, the near term could continue. But we believe that that level should be held. 47,400 should be held, and on the upside, 48,200 is the first level of resistance that we're watching for.
All right, that's a crucial level to watch out for now. 47,400 kind of levels that Kush just mentioned. But let's talk about specific stocks as well. Kush, one stock that was lending support to the Nifty Oil and Gas Index was ONGC, right? Did extremely well in a weak market. Of course, there were triggers. Jefferies has initiated a buy call, with target price of 390, which implies a near 50% upside. Here on the upside, what is the kind of level you would be working with, given today's strength in a weak market?
Well, I mean, we know, barring that, also there were reasons why ONGC was up. But if you see from a near-term perspective, the kind of volumes that we saw today, even those weren't sufficient to take the stock above that 285 mark. And the reason we mentioned 285 is because for the last month or so, that's the high that the stock has made. So in the next couple of days, if the stock is not able to take out 285 convincingly, close above that, then I'm afraid that this rally also might fizzle out, and we might see the stock consolidating in that band of 265 to 285. So for me, near-term momentum is contingent on the stock taking out 285 and closing above that. Now, for the target of about 350, 380, well, the stock already run up quite a bit if you see in the last year and a half. And for the past couple of months, it's been consolidating. So this is a good sign. The stock is making a base, but I will wait for these critical levels to be taken out before we can say that the stock will indeed move to 300 and levels higher. So watch for 285. The level's not too far, but it's still a critical one.
Right, another stock, in this oil and gas pack, Reliance Industries, of course, it managed to hold out for the better part of the day, although just about ended, I think, a shade in the red. But if you look at the YTD gains, it has clocked in double-digit gains, right? I think it started participating quite late, but it did, hit a new high of 3,024 recently. But any chances of this high getting taken out over the next couple of months?
This is a stark possibility, and it's just that because of the legacy, Reliance gets clubbed in the oil and gas space. Otherwise, we all know there's far too much going on, in the company beyond that as well. Now, we've been bullish on Reliance for a while now, even when the stock was languishing for a while around those 2,300 kind of levels. We were bullish. We had recommended a buy call on Reliance for a while, and that view remains. So every dip that you get into the stock, is actually a buying opportunity. Even today, if you see, the stock has consolidated mild positive, mild negative bias, I would say, but it has respected the key averages. All in all, my suggestion would be, if you do get any kind of a dip in Reliance, continue to buy. We are looking at a target of 3,100 and 3,250 kind of zones in the next few months on Reliance. So very constructive on Reliance.
All right. Also some gas stocks on my list today, IGL, MGL, Gujarat Gas, these stocks saw a healthy rally given the fact that the BJP manifesto, spoke about expanding the piped gas network, right? But, recently we did see some bit of knee-jerk reaction to, the warning from oil ministry when they said that the gas reforms are not being passed on to customers. That was a knee-jerk reaction, but, now, should one play the gas pack as well for any kind of an upside over the next 2 to 3 months in the run-up to elections?
Nandita, I remain very skeptical on this entire lot. I think time and again, you and I have also discussed where these stocks are, flavor of the week, flavor of the month kind of a play, where, they trend on news and then they fizzle out once that impact is done and dusted. Now, while some of these have made good, they've covered good ground in the last couple of trading sessions. These names, and I've been checking some of these names, they've not even been able to cross the near-term highs that they had made, the medium-term highs. So that's exactly, a point in case where these stocks, while they do continue to rally, the confidence, they don't instill so much confidence as to go out and buy at, higher levels. So from my perspective, anyone who's holding these stocks should continue to hold on with trailing stop losses, but fresh entry may not really be warranted at these levels, because some of them, in fact, all of them, the three names that you mentioned, IGL, MGL, and Gujarat Gas, are close to the resistance zones. So hold with a trailing stop loss. For fresh positions, I would say wait for some time.
Would you say the same about metals? Because, they are quite trigger happy as well, right? If there's any global data coming in, we see, metal stocks rallying. The same happened with Hindalco today. Of course, copper prices are at 15-month highs. And we've seen in general, global metal prices rally on the back of positive data coming in from China. But do you think, on the charts, do you think, the bouts of rally that we see is sustainable? Or do you think these are also, trigger happy stocks that one should be cautious about?
So again, they fall in the exact same category as we discussed about the city gas distribution stock. The only difference I would say is that the rallies here are longer and more sustainable. The volatility in that sense is the same as you see in the city gas distribution counters. So when you have positive news coming out of China, and that does look somewhat sustainable, somewhat reliable, and then you've got the domestic factors also playing out, then these stocks tend to have a longish kind of a rally, where you wouldn't mind, buying these stocks once they cross the resistance zone, even if you're making, new highs, new recent highs. So for me, the metal play is definitely more reliable than the city gas one. Among this pack, we like Tata Steel, Hind Copper, Hindalco, some of these names that we've discussed, they continue to shine. And, this is something that I will have on my radar. Even if we see some kind of dips, I think the structure that, we're seeing, technically will suggest a buy on dip kind of a strategy on the metal names.
All right, buy on dips for metals. But what about IT? TCS just came out with its numbers and, sprang a surprise on the margin front. We've seen, some of these brokerages upgrading the stock, upgrading the target prices as well. But of course, we also have Infosys coming out later this week. On the charts, if you see compare Infosys with TCS, you'll see how much Infosys has really underperformed, right? So, from that perspective, would you advise looking at Infosys, or would you say TCS is primed for more upside?
So, if we are looking at, let's say, the sector as a whole, I wouldn't be. I don't think I'll be missing out too much if I don't enter into either of these two names. The moves haven't really been as convincing. Sure, right? TC has, rather Infosys has comparatively, given lesser returns, or rather, underperformed when you see TCS's move. So if I were to pick one of the two, I would for sure go with TCS. But I may not entirely be convinced about that pick also. In fact, if you look at the other two big names, also HCL Tech and Wipro, they too haven't really been able to, give those kind of sustainable moves. So we think there is possibility that these stocks could continue to consolidate, maybe with a mild negative bias too going forward. There could be gains to be had in the mid-cap names or certain offbeat names. So Persistent, KPIT Tech, these are some of the stocks that we have on our radar and we're watching for. But the big four, so to speak, in the IT space, we are not too constructive on. We'll perhaps watch for some more time before we have a buy call on.
Okay. The other stock that caught my attention today was Exide. The stock has hit a fresh 52-week high. If you look at the last 1 year chart, the stock has given, obviously doubled, 117% returns. Would you call this a breakout stock now, or would you say that, it's kind of all already done and dusted, and now maybe in the overbought zone?
So overbought zone for sure. If you look at it across time frames, you'll find that the spike that the stock got, let's say over the last about a month and a half or so, has definitely put it in the overbought category. The only thing is that this entire sector is actually benefiting from a lot of changes that have been happening. So I think here a buy on dips is for sure a strategy that one should implement. The stock could very well move to 440 and 465 levels also. That's the kind of strength that we are seeing. In fact, the last couple of weeks, the big moves have come on the back of very big volumes, which is to say that even at these high levels, there are people who are interested in entering into this stock. So this rally, this move does look sustainable. Just that because in the near term it's gone a little overbought, overheated. Perhaps wait for dips. Anything closer to 380 kind of levels should be a very attractive risk reward ratio. But as I said, on the whole, the stock does look on a very strong footing.
Okay, that's the view next side. But Eureka Forbes, this stock saw very strong price volume action today. Nearly 9.5 lakh shares traded on the BSE in bulk deals. I think since Feb, it has picked up pace. In the last 6 months, if you see, hasn't given positive returns. But I think since Feb, it managed to stage a turnaround and is giving positive returns now over the last 1 month, 7% uptick. And today as well, it was one of the buzzers, right? So Eureka Forbes, are you spotting a trade here? It's still, over 100 rupees away from its 52-week highs.
Yeah, and if you look at the move today, it's the high that the stock has made is precisely at the 200-day moving average. So 502.50 is the high and 502.75 is the 200-day moving average. Now we all know why that is relevant. Despite the kind of stable up move that we've seen, the stock will continue to see selling pressures at higher levels. So while someone who's entered at lower levels will perhaps feel a lot more comfortable, I think any kind of fresh entry should perhaps be considered only after this 500 level is taken out. There have been a lot of there's been a lot of change of hands around that level. So I think the supply will come in once the stock approaches 500 once again. So existing positions continue to hold on. But for me, any kind of fresh trade would be above those 500 kind of zones. So I'll definitely have this on my radar, just not going out and buying yet.
Okay, not buying just yet. What about Aster DM? What do you make of today's move? Volumes were also, fourfold more than you get to see on a normal day. Stock has rallied 37% in the last 2 weeks itself. Would you be buying this now, or would you say again wait for a dip here?
No, Aster DM is something that you can consider buying, because let's not forget, the kind of dip that we saw in the entire list of hospital stocks. What happened there was perhaps something that the market took time to adjust and digest. Once that has happened, a lot of these names have started moving out. While Aster DM is not our top pick in this space, but for sure, with the kind of fall that we saw, the risk reward ratio became extremely attractive, and that's the kind of turnaround you got to see on this stock. On the whole, the stock's actually in an uptrend. Even if we look at the recent moves, it's still some distance away from that overheating territory. So for me here, 575 and 610 are kind of very real targets, and the stop loss comes in somewhere close to this 500 zone. So even if someone wants to get into the stock now, not a bad idea.
Okay, not a bad idea to enter into the stock right now as well. That's Aster DM for you. But last stock really on my list, Kush, would you look at a trade in Vodafone Idea before the FPO opens on 18th of April?
Not really. I would say avoid. There have been this is an overcrowded trade, and the stock's really not done well. I mean, it might jump about a year, a rupee or maybe a little higher from here. But it's a very overcrowded trade, and the stock's really not done much for investors, in the recent past. So I would say avoid. There are a lot of other, clean plays in the market right now. So for me, Vodafone Idea for now remains an avoid.
Okay, Vodafone Idea remains an avoid, but it's a truncated week. How would you position yourself, for the next couple of weeks going forward? Any stocks that's catching your attention? Anything that you would like to recommend for our viewers this evening?
Sure, a couple of them. One stock where we've not really seen a dip, which is BEL, Bharat Electronics. Here, if you see the stocks actually, gaining ground, the volumes have also been fairly decent. So I think 250 plus kind of near-term targets are very likely. So Bharat Electronics is something that we have on our radar. Now a stock from a slightly different category, something that has been doing well, but took a bit of a knock today, was BSE. Here too the stock has seen very sharp up moves, and now it's consolidating. The bias here remains positive. So we believe that 3,000 and 3,200 are very realistic targets for BSE, and support zone comes in at 2650, which means the risk reward ratio here is very attractive. So BSE and BEL are two stocks that we have on our radar. and that is something that your viewers can also consider at least watching or doing their study on.
All right, BEL and BSC on Kush's radar. With that, Kush, thanks a lot for taking out time and joining in this afternoon and sharing your perspective on so many stocks. And of course, some of our viewers were also sending in queries about some of the stocks that we discussed. So they're also happy that we managed to address some of their queries. Thanks a lot for joining in and have a great evening.
Always a pleasure. Always a pleasure.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, we have ended the day below that crucial 22,300 mark. But let's see whether or not we see buying emerge at lower levels or not. But it's completely timed out. It's a good buy from me. Thanks a lot for watching the show and tuning in. Have a great evening and come back and join us tomorrow morning at 9 a.m. on Opening Bell. Thanks a lot for watching.